Hi, this is Tim with BIS Commodities, taking a look at the week in review, the full first week of February 2017. Let's take a look at where we closed for the week, starting over in the grain markets. Corn closed half a cent higher, 362 in the March contract. Beans closed a little over 4 cents higher at 983 in the March contract. March wheat up 3.5 cents on the week at 449 and a quarter. Cattle market down 32 cents in the February contract at 126.52. Feb hogs down a hair over $2 at 73.17. April's, which will become the lead month next week, down $4.70 at 68.85. Oil took a hit this week, down roughly $6.50. The dollar looks as if it could post over 100 points higher, 90.30 last trade there. At the time of this broadcast, the stock market has been the market maker this week. Last week closing somewhere around 25,500 points, and right now at the time of this broadcast up a couple hundred points, and that would put us roughly at a 1,300 point loss for the week. The volatility continues there. Taking a look at our commodity markets here, let's start with corn and beans. This week the big news item was the monthly supply and demand report, and taking a look at corn, we came into that with a carryout of 2.477 billion bushels. The trade was expecting a small decrease in that trade, and we did, or in that number, we did see the USDA reduce that carryout number down to 2.352. That came in smaller than what the average trade guesstimate was, and that was supportive to the market. The big item there is we did see exports increased 125 million and left all the other demand numbers alone, thus the carryout level. So that was reflective of some of the strong basis we've seen here this past month as well. We've seen some excellent export sales, or stronger export sales, over the past 4 weeks as well, and it's helped support the USDA to bump that number up. Taking a look at the soybean market, we came in from last month at a 470 million bushel carryout in soybeans. The trade was looking for a small bump up. The average guess was about 496. Trade shocked us with a 530 million carryout number for soybeans, and that was all exports, as we did decrease exports 60 million bushels in beans following a 65 million decrease last month. Left the crush number alone. So that was viewed as a bearish number. Now, that being said, we did see strength here this week in both corn and beans, and some of the primary reason for that is one, the soybean market's taking a look at South American production, which was left unchanged by the USDA's number, as Brazil was increased 2 million metric tons, Argentina was decreased 2 million metric tons. It was a push there, but ideas of degrading crop conditions in Argentina still continue to support this market. That feels as if going into this week, then we're probably looking at a potential 10-15 cent type move come Sunday night, with soybeans being the driver and corn being the follower at this point. And that'll be the primary thing to take a look at in this upcoming week, is continued weather ideas coming out of South America. When you take a look at these carryouts from a world perspective, we did see a slight decline in both corn and soybeans from a world perspective. That being said, it's still very comfortable numbers at this point. When you take a look at the soybean market right now, exports are truly going to hinge on what production ends up ultimately being coming out of South America, and that's pretty much going to be determined during the next 30 days or so. One of the other items moving forward is a commitment of traders report released this afternoon, telling us where the managed money is sitting, and we've seen another drawdown in shorts for both corn and beans. Corn was down another 48,000 contracts, bringing their shorts down to about 82,000 contracts, whereas soybeans reduced their net short just shy of 12,000 contracts down to just under 10. as reports through Tuesday. So we're probably looking at a fairly neutral number now for soybeans, and corn is coming closer to a neutral number as well. Wheat, actually, the short covering is all done there. Actually, we're seeing Kansas City wheat a little bit stronger, and still holding some length in soybean meal here as well. So as we move forward, the question is, do we see some investment money want to come into our commodity markets? Will we see some drawbacks from the equity markets? Will that money be put on the sidelines? Will it bleed over in our markets? That's one thing that we'll have to keep an eye on this upcoming week, along with South American weather. When you take a look at the livestock markets, cattle futures, fairly steady in the February contract for the week. Cash is yet to trade at the time of this broadcast. Most are looking somewhere around 125, 126. Cash trade steady with last week. Cutouts for the week had a hard time getting through 210, down $2 today, down to 208. But 210 is providing some resistance as far as the choice is concerned to the upside. And then when I take a look at with no cash trade yet surfaced this week, I think coming Monday, that's probably going to be the determining factor as far as futures is concerned. How is cash going to trade here later on today and or tomorrow? The hog market is down hard on the week, with the April selling off hard. As I mentioned earlier, almost $5. The cutout was down about $6 on the week at 75.32, where we're seeing cash down $3 this week at 69.72, and so the Packers are getting squeezed in here. We're seeing multi-month lows here in hog futures. We're seeing the fund liquidating a fair amount of their length in here as well on the Commitment of Traders report. We come in the beginning of next week. From a chart perspective, maybe we can find some support down in these areas, but we're going to have to see the cash stabilize a little bit, being down this week. Also, April is trading at a discount to the cash index right now, where historically we see it the other way around this time of the year. So that's something that may be supportive to that April contract. So if you have any questions about this or anything else, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.